Good morning. This is Vince Lanci. This is the Gold Fix. Precious metals trading and information for active traders, as well as what's driving the gold markets and what could be driving the gold markets in the day ahead. Why don't we start by talking about yesterday and the activity we had yesterday? Now, there's a lot of trend lines on here. We're in the process of setting up an even more robust visual, but right now you'll notice that on the hourly, right, if you go to the trend line is gone. I took that trend line off. Okay, so if you remember the other day on the second, we had this little triple top sort of formation that came in at 1198. That was a warning that even though we broke through 1194, 1198 would be hesitation. It pulled off of it. It's just to bring us up to speed again. All right, and then it rallied very fiercely would be the word. And from there, what we had then was we had a market that touched up against those yellow lines, our weekly and monthly trend lines that I left in there. The orange line we'll get to in a second. That's a new line I drew. And what we're looking at now is we had a seesaw back and forth uh, off the yellow line, and then we sold off. Now, a word about this. The Yesterday we actually had a we traded yesterday in gold, and we actually sold it on a bearish signal. And I think today's lesson would be in if you have a system and you have a discipline, stick with it, because I did not stick with it and I cut profits short yesterday. We'll get to that in a second. Okay, today gold is now trading 1203, 1203.70, 80, which if you are following the COMEX close, that's about $1 higher. Uh, just give me a second here, and I want to pull that up. All right, yeah, about $1 higher. All right, we're going to get to some technical numbers in a second, but what I want to put up now is I want to put up, since we're on the minute chart, I want to put up uh, the Bollinger Bands that I use for. Oh well, can't do it this way. All right, bear with me. All right, here we go. All right, this is what it's all about for my trading. All right, if you take a look at the Bollinger Bands yesterday, ignoring all the other lines if you can, all right, we got a sell signal here, and we sold it at 1205.70. The stop out, which is system generated, has nothing to do with technical analysis, was a very tight stop out of 1206.70. We put it to 1208 and then trailed it down. The market never looked back, and about an hour into it, our target was basically 1201.70, also system generated. We got to here, all right, which is a low of 1201.90, and we kind of threw in the towel because we didn't see silver coming off. Uh, and we ended up covering at 1203.30. So $2.50 profit on the trade. We risked two to make 250. I'm not really uh, uh, upset about that. It stays with the discipline. But the point is this: the system said if you're risking this, it should go to 1201.70. Now, had I just shut up and walked away from my desk, we would have gotten 1201.70 and then some lower. So the point is, if you have a system and you trust it, then you should be less subjective. I let my observations on silver color my perception on gold. Now, there are times when you should ignore systems if your intuition is bothering you, especially if you have a loss on the table. But I had a winner, and instead of letting the market take me out as the system dictated, I acted early. So the point being there is, if you have a discipline and you have a system and you're protected, let it run for you. If you have a system and you see something that also has an intuitive or subjective input like correlations, That everyone who's trading gold is looking at silver and vice versa, uh, then that's fine. But just don't say you have a system. You have a hybrid situation. So here we are today. The market continued lower. By the way, this rally the other day was on a stronger dollar. We'll talk about the currency pairs because I think that's important. Gold trended sideways to lower. I think it's important to note the last 2 days, uh, gold has rallied on the U.S. Open and started to sell off after London's close. Now, how long will that pattern last? I suspect it'll last as long and be as pronounced and easy to identify as long as Golden Week is going on in China. The reasons for that, uh, basically, China activity is being handled in London as opposed during Asian hours because their markets are closed, at least officially closed. Right. So what I'm saying is at 11 a.m., if you're bullish, pay attention between 11 and 12 when London closes. If the market's going to sell off, whether it be an algo or just a lack of buying or a commercial who's selling into the market, just be aware. Bullish American Open, bearish at 11 o'clock and afterwards. That pattern has been 2 days in a row, so I wouldn't call it a pattern. I believe serial killer needs 3 people dead, so we won't call it a serial pattern yet. But here's what we have today, looking at before we get into the technical numbers, which are not mine, which is why they are so good. I'm not a technician. Today, if you look at the Bollinger Bands, they're very tight, and you would think that I'm getting a signal if they widen. If you follow the VBS trading algorithm, the answer is no. There is no signal coming if we widen this morning. Doesn't mean we won't go up. Just means the risk reward will not present itself because other factors haven't lined up. Let's get off of that and let's go to a technical aspect, I think, which is more interesting today. All right. All right. Staying with, let's go to the daily. All right. Okay. Now, on the daily chart, what you see there is the yellow lines, the dotted yellow line. That's the monthly line going back forever. The solid yellow lines are weekly lines that are extended. So sometimes you'll see penetration, sometimes you won't on the candle wicks. And the yellow line that's going vertical, that's an hourly line that just doesn't render properly in this time frame. The daily lines that matter for me going down are the white line, and for me the white line matters a lot because it was penetrated and then reasserted itself. So this area here, especially when you have a trend line, whatever your technical, whatever your discipline, just be disciplined at it. The market penetrated it. I connected here, and then the market went through it and then came back above it, which revalidates the line. The 2 lines above there, so you have kind of a, I guess, called megaphone, a channel, whatever you want to call it. I just call it lines. All right, so let's go from there to the back to the hourly because I think today, if you look at the hourly while you're listening to some of the numbers, it'll make sense. Now, the numbers for the past 3-4 days that have been relevant for us have been approximately 1193, 1198, 1205 to 1208, and then in the teens, rejecting the teens, under the teens, and below the market, 1189, and below that, God knows where it could go. But that's my opinion. But here's some numbers for today. All right, below, and we have another chance for a nice active trading day. Uh, I believe uh, if you're below 1201, that is a level where there are some stops. And I believe it would not be a bad play to be looking to get short below 1201 with a target of 1195. Uh, your stop out should be relative to that. So above 1203 to 1206 area. So right now between 1203, right now we're at 1203.90. Between 1203 and 1206, I'm neutral. as are other people that I work with. Above 1206, bullish. 1211 will be your next number up there. 1211, 1212. Above 1213, I'm not saying it's going to reject the teens when I say it hates the teens. I'm saying that it hates the teens. So if it hits 1213 and starts to skate, it will skate higher. There's congestion between 1213 and 1220. I don't think it will matter this time up. Uh, that's an opinion. It doesn't mean I won't have stops in. So if you're long above 1206, you're looking at least to sell or reassess between 1211 and 1213. If we get above 1213, I think 1221 is not a problem. We're 1220.70, which is the number everyone cares about. Above 1220.70, 1227.60, I think is a number. That's a number that Michael Moore generates. Now, on the downside, if we break out of this 1203 to 1206 little range here, short below 1201 with a buyback area in 1195, 1193. Now, if we get to 1189, that's a big problem. Below 1189, and I think that the whole bear play setup comes back in, and that means 1179, 1178, 1167, 1160. So anything substantively below 1189, I think we have to be worried. So let's take this to the monthly chart so you can see from the macro point what we're talking about. All right. All right. The dotted lines, right? The monthly lines that everyone has on their chart, they come in, in areas like 1189, 1193. You see a lot of congestion in this area right here. And that is what we're talking about. We are talking about 11, this whole area where the white line intersects with the upsloping dotted yellow line. So this whole area here is dangerous if we get into that again. And it looks good right now, but we are in between a couple lines, and looks like a little channel. Who knows what's going to win? But the day traders should be looking possibly to buy strength above '06, and as will we. And we'll talk about that next. What I want to do right now is I want to. All right. So let's see. All right. So let's go through the recap last night. All right. We are looking at Powell spoke yesterday, and while you're reading that, I'll just make some comments on what I feel and see. All right, so you should be reading this if you can, and as I discuss FX pairs. Yesterday, the dollar was stronger, and gold performed accordingly. Today, the dollar is consolidating its gains from yesterday against most of the major currencies. The the Aussie dollar or commodity dollar uh, currencies are underperforming today. Bond yields are still moving higher, and while those bond yields are moving higher, you'll see, as it says here as well, uh, major stock markets are lower today. Now, that's a correlation that I believe in. Higher yields is lower stocks. And you'll hear at 8 a.m. Larry and myself lament the fact that our yields are now 317, 318, and our stock market is just not as high as it could be, but it certainly hasn't come off. So, but when you look at the global situation, it's also consistent, although not as 100% uncorrelated as the U.S. is. And what I mean by that is considering the fact that yields globally are higher, uh, the global stock market, X without the S&P, is down less than 1%. I'll give you some examples. The MSCI uh, is down. It's off for its fourth consecutive session. Uh, Chinese markets are closed, but there's going to be a risk of a dramatic start to their markets lower trading next week. Hong Kong shares are lower by 1.5%. They was off by over 2% yesterday, so basically 4% for the week almost. Um, the Dow Jones Stock 600 is off a little more than 0.5%. Financial sector is a little bit stronger. But over the last sessions, the net is only down 0.8%, which it seems minor given the yield rises that we have had. Uh, the If you get into commodities now, all right, we have grains, right, stock indices, right, all right. So we're looking at dollar index, oil. Okay, oil is stronger and continues to be stronger. And the actual WTI Brent spread, which I follow, is not widening as the market's rallying, as WTI is actually increasing in price. And I think what's happened is the markets have under valued the lack of Iranian oil in the market. So it seems the loss of Iranian output is a bigger factor to oil. Uh, Given yesterday's oil number, the large build, it wasn't enough to offset the supply issue. So, I think the only thing stopping oil from coming down is, I think, WTI having a better pipeline access to the eastern demands. Uh, Yields are up again. Why don't we go to that? All right. All right. All right. So yields are up again. All right. Here's your charts. All right. So silver is higher, gold is higher. All right. All the metals are higher, and that includes uh, copper. I believe this is China buying during European hours. Uh, I think we want to get to, all right. So we're a little bit all over the place. I had a much better planned thing here, but you'll notice that the three currency pairs I think you want to pay attention to right now are the dollar offshore yuan, the dollar yen, which historically had been a a an important indicator for us, and had decoupled when the trade war started, but is starting to reassert itself a little bit. So the higher the yen goes on this chart, the weaker it is, and that would mean the weaker it is, the stronger the dollar is. And so if you're bullish gold, you want this chart to go down, meaning it takes less yen to purchase a dollar. Uh, Moving forward from that, you want to look at the euro, which uh, has had some problems. Actually, is the bigger mover of late, and I don't have that on this list. Let's go to that list. Back to the FMX. All right, and here we are. Now, 115 was a number that a lot of people cared about, and I think there were stops in that area. This is the euro getting weaker against the dollar. And so now you have a little bit of retracement higher today. So what you have is a weaker dollar slightly. Gold's not buying it yet. It's only up a dollar or so, but this is a retracement of a down move. I don't think you should ignore the euro as I have been for the last week or so as a currency that matters for gold. But it does matter. So it looks like the euro and the yen are moving uh, uh, in pair again, even though the euro is underperforming. People are putting on euro Japanese yen trades, I'm sure. Uh, so let's get it back to quickly. All right. So now you have the U.S. 10-year yielding 3.21%. All right. Uh, why are stocks not lower? Right. Okay. Well, the ES, the mini S&P, is lower today so far, and I think it will continue to bleed, although not collapse until there's an event. But that's an opinion. I think what's really worth noting for gold players, the yield curve steepened yesterday, and think about this: the government is raising rates, and the curve had been flattening. The government continues to raise rates and the yield curve, it just steepened a little bit yesterday. But if the yield curve starts to steepen as the government is raising rates, that is a comment that people are losing faith in the government's ability to keep inflation in check. That would so I believe a steeper yield curve is conducive to a higher gold price. Now, that's a leading indicator. Of course, the steeper yield curve at some point has to weigh on the dollar, and the dollar has to come off. And I think that will happen. It just won't happen tomorrow or anytime that we want it to. Uh, Within the other markets, it's 751. Within the other markets, the Shanghai Composite is closed. All right. The Dow futures are where are we? Okay. So Dow futures are called lower, right? So 0.2%. The ES, right? That's the YM. The ES is down 0.25, and the Nasdaq's down 0.43. What we have been seeing, we talk about frequently at 8 a.m., is the rotation and correlation between these three. Though not necessarily we trade one militantly against the other, but Larry Benedek, the CEO of the company and founder of the Opportunistic Trader, is very aware of internal rotations. If one is leading or lagging, he may. This is an education for me, because I used to do this with copper, silver, and gold. If the S&P is strong and the Nasdaq is weak, does that mean the Nasdaq is a sale or the Nasdaq is a buy and the S&P is a sell? These are things I think that are important, and I think they're important for every beginning trader, and I think they're important for metals traders. Listen carefully. You've got to pay attention to FX pairs if you're trading gold. If you think gold goes up because it's a fear product, you're fucking wrong. Gold goes up because it is no longer a fear product. It is a profit center for people that are trading it against the dollar. That's it. Think about this. If every currency in the world is having problems, if every paper currency in there, I'm talking to my libertarian hard money friends there. If every paper currency in the world is having problems except the dollar, they're not even looking at gold as something to put your money in for safety. They're looking at dollars, and the reason they're looking at dollars is because gold, although it is money, it is not currency. Don't give me the crypto nonsense and how it's going to be money. Believe me, government regulations will not make it as fungible as you want it to be. Money flows from the weaker fiat into the strongest fiat, and that's the US dollar for now. Yes, if there's a total crisis, that money will go from the strongest fiat, which is the US dollar, to hard assets like gold. But do not buy gold because of a Brexit problem. Brexit was the last time that worked. That won't happen again. Next time gold goes up, it'll be because of a debased dollar, because the Fed, I believe, will have possibly gotten ahead of itself and caused a crash it did not intend to. Time is 7:53, and what I do want to do is, if you forgive this here, we're going to go to this. All right. Here's your numbers for today. Now, this is, these are the numbers that I care about in conjunction with other people's numbers. 12, 20, 70 on the upside, working outside in. That's the number you care about. If you're short and we get above that, you might want to call the doctor. If it goes back below that, fine. If you'll notice, Teenscape, that box there, those numbers in the middle there, I don't put a lot of weight on them, although they are legitimate. I think once we get above 1212, we're going to skate this time. I think the teens are going to be something that are going to have stops in them. On the downside, below 1201, depending on the slope of the line that you're looking at. But 1189 is a number in that area. Now, these are not hard and fast numbers. What they are is, if you're an active trader, you should know, well, if we get to a number, is there high volume there? How long does it stay below it? Oftentimes when gold and silver are lower, the more we move sideways, the more bearish it is. And you have to know when the more we move sideways, or if there's heavy volume, you should buy or sell, or how important number is respected. Okay, so those are the numbers for today. 12, 20, 70 inside, right? Between 1203 and 1206, I don't have anything. I think that's a range. below 1201. I think that's a good short. So we're like a couple dollars away from a good short. All right. The other thing here is uh, this is basically uh, some commentary from Michael. And 1255, 756. Thank you. All right. We're not stopping. Thank you, Michael. Uh, all right. Let's just wrap this up here. All right. For the third time, we're now going to say, okay, now we're now above 1206. All right. And I'm going to get a signal to be long that I'm going to ignore. I'm going to ignore it because of these trend lines at 1210. If we get a signal to buy it an hour from now, I will buy it. So we're looking to buy above 1206, uh, between 1206 and 1210 an hour from now, not in the first hour of trading. I think that we called a bottom in gold uh, about a month ago, and we gave a buy signal last week, and so far that has worked out well. I hope to hear you. I hope to see you. I hope you join us again tomorrow, where we will be discussing gold silver ratios and macroeconomics of gold as it relates to the IMF. Have a great day trading. This is Vince Lanci for the Gold Fix, and stay with us for Larry Benedict's AM Roadmap starting in 3 or 4 minutes. Have a great day trading. And if you want to see what our trades are, pop in and visit us. Have a good one.